Guys, how are you guys doing? Welcome to Bretton's Financial Trading Academy's Monday's webinar. So today is the 17th already, 17th of May, 2021, and it's a Monday's week ahead so for us to actually look at what have actually happened the past 24 hours as well as most importantly, looking at the whole week ahead and what to expect, what are the trades and trading opportunities, especially which are the pairs would probably be best for us to pick this week. So yeah, I'm actually happy with gold's progress at this moment of time as well. As you can see, it has actually hit, I think, heading towards the third TP, as well as hit the first and the second. We want to talk a little bit about what has actually driven the price of commodities. So I think this whole week is going to be quite a volatile, busy week, especially for commodities, buying of commodities and also commodity currencies. So commodity currencies will probably be the best for us to actually pick out, like, for example, the CAD, Canadian dollar, impacted by oil. We've got the Australian dollar, New Zealand dollar as well. They're all commodity currencies. ZAR, ZAR, South African rand as well. So I see that a lot of movements have actually triggered the price of copper, first of all, as of last week, because last week we had a protest in Colombia, and that protest lasts for a couple of days. Colombia is a trading partner of the US, quite a big trading partner in the oil, in copper, in minerals, in a lot of other things as well. And that sort of rippled effect. And then on Saturday, day before yesterday, we had the largest, biggest colonial pipeline, oil pipeline in the US got hacked as well. So all these things are actually connected and related to halting some supply of commodities, especially oil. And with the oil ripple effect with other exporters and importers especially of these countries. So that actually ripple effect a lot of things. And this is why we're looking at gold as well. And gold has a lot of reasons behind, not only because of the commodities, because commodity usually they work as a pack, like a pack of wolves, you know, they one would actually impact another. And because of the US 10-year yield has actually fallen as well. So it has actually fallen and caused dollar to fall. And with the dollar falling, we are looking at a lot of Chinese buyers as well going into buying bullion. The reason they have bought the bullion is also because of their Chinese imports have actually gone up. So usually what they do is that to meet the domestic demand, they usually buy a lot more of gold. So this is why you're seeing gold rising for many reasons, including the US, Chinese buyers. Also, we have seen that the retail sales figures for the US has actually gone down. So that sort of pulled down the US even more. So then now we are looking at a lot of interest of safety reasons, including situation that has got to do with the virus, COVID-19 as well. So that is driving a lot of safety, what do you call that? Safe haven type of needs at this moment of time. So I see it as a great trading opportunity for this whole week. I think we might see very big moves. We might see mother candles going up, going down. We just have to be very careful. This is the time that we can actually trade a lot, but not trade. You can trade either with many trades or to actually sort of leave your trades. But again, I must warn everybody, you must have your stop losses, because this is the time that the greed will actually kick in, and then the overconfidence of traders will actually kick in as well. And then you will start thinking that, you know, you are in control of the market. I'm never in control of the market. Nobody is actually. So you want to be very careful in check listing, looking to the left, looking at prices, looking to the left for support resistant levels and all that. This is really very crucial. And even though it's a beautiful pattern, geometric pattern, a beautiful setup, please have your stop losses always, because you never know when it comes to sudden changes. Because when the trend is really strong and now it's building up with the trend for gold, for oil. Oil is actually moving upwards as well, because the supply is lacking. So because of the lack of supply, demand is high, so it might push up prices. So price of oil as well is looking like to the upside. We've also got crypto. So cryptos is also probably going to do well as well. So you want to look at the set of cryptos and all the alternate coins as well. So it's the time that might actually trigger the interest of various investors in all kind of portfolio as well. But this is the time that you still want to be careful in trading, but right along the trend, but don't ever leave your trades open with no stop losses, because this is just going to be pulling down all the excitement later on, and then you won't be able to catch up later on with the equities that has been lost. So you want to be really, really careful. But yes, we will have definitely loads of opportunities in trading. And we just want to know that it is being driven by fundamental factors. So the fundamental factors are fueling all these movements of various asset classes. So I think for me, I would actually be looking at commodity currencies a lot. All these AUD, JPY, CAD, JPY, against JPY as well is quite interesting. But we want to firstly look at what's best to pair them with, and then the clarity of trend, I think, will be there because of the fundamentals drivers. So apart from that, let's see whether I have missed out anything. Yeah, so gold is going to be quite good. I think it's trading above the 1850 already, and it is going to be used as a safety and inflation hedge, mainly because of what's going on now. And Chinese buyers in China will actually drive the price of gold a lot more, I think, for this whole week, because they are just buying in billions. So this is basically it. Let's go on to the action Forex. I still have got some problems with my personal account with the Forex early warning. It's just got to do with the credit card in there was not updated or stuff like that. I can't remember what it was, but I guess they're sorting it out for me, but I still haven't received anything. So my account is still not activated, but that's okay. That is not going to stop us from picking the right pair for the whole week and for today to trade. So as we can actually see on the top 10 movers itself, we have got, out of all the 10, we have got clarity in GBP AUD because of the 4 dots there, you see. So you've got 4 dots on 4-hour daily, weekly, and monthly. So I just want to write that down as well, GBP AUD, just so that, because right now we want clarity of trend and we want to know why GBP AUD as well. So it's good because we've got AUD in it, GBP as well. We want to take a look at the economic calendar for today as well, to look at motivators and also confirmation of which pair is probably best for us to actually trade today, following all the things that are going on in the market. Okay, so that's for the heat map, not heat map, but the top 10 movers right here. We can see that it's focused on NZD. Majority of the pairs are NZD pairs. Majority are selling the NZD at the moment. So this could actually be Asian session, and then we want to look at whether or not they will be buying all the commodity currencies or not, because most probably, if you are getting a lot of positivity in the Chinese data, Chinese are doing well, buying a lot of things, then it might motivate the AUD to actually be on the upside. But I don't see that at the moment from the top 10. So we don't worry about the top 10. We just want to look at which are the focus at the moment of traders. But majority are putting their focus on NZD pairs, as I can see here. Some JPYs as well. GBP, but mostly NZD and AUD, as we can actually see here. And we can tell as well that it's got a lot of focus on all the commodity currencies are all in within this 10, the list of 10 traded currencies or currency pairs. We've got the AUD there, NZD there, we've got the CAD as well. So yeah, that is giving us that hint that it's probably going to be a lot of commodities being focused on. But let's take a look at currencies right here. We've got the currency heat map. Let's take a look at that just to get a bit of a confirmation. On the daily chart, I think it's just about to form a kind of a very nice trend, but it's just not dark red and dark blue yet. It's just blue and red. So it's quite good and quite steady, actually, especially with the Canadian dollar, Australian dollar, New Zealand dollar. You can see these are all commodity currencies. USD as well. You can see that it's forming. It's probably going to, maybe after London Open, things are going to get clearer, and then all the rates are going to be dark rates. Hopefully the blue is going to be dark blues as well. Then we get a better picture. So at the moment, perhaps it's a little bit early. I think it's always going to be reactive of the London Open as well, being the most traded market or session. So here, most active for the bigger session, actually. So let's go on to action bias as well. We'll take a look at action bias right here. We've got some straight rows, but we like the whole row starting from the 1 hour chart right here all the way down. Then it would actually be giving us more motivation. We can see that it's building up on the Euro AUD on the upside. So I'll write down the Euro AUD as well. So I can see that the AUD is paid a lot of attention to. I think the clarity of trend as well will come in the AUD side of it. But in terms of knowing what may actually be more in focus as well, we can actually look at the economic calendar. The economic calendar for Monday, today itself, it's been busy on the Asian side, especially with the retail sales. So we had this retail sales Chinese figures. It's been positive, and basically, apart from that, we want to pay attention to some others, but they are not really going to be too high in terms of volatility. So I would still guess that because of how it has actually happened in China with loads of other press conferences, imports figures, them buying gold and all that, it will definitely create more trading opportunities for Australian dollar, New Zealand dollar as well. So we want to look at Australian dollar, New Zealand dollar for today as well. And we don't have any other catalyst or something that is really pushing the market forward for the major currencies or Euro or USD, CHF, JPY, that not so much at this moment for today, for Monday. But then we are looking at Tuesday. Tuesday seems to be quite busy, and it's going to I think give us a lot of opportunities on the data side for Australian dollar. And because it has been triggered and also impacted by Chinese data, commodities, and all the things that are going on, I can see that it's probably going to be quite interesting on Australian pairs. It's going to, Australian crosses are going to move quite a lot as well. And then we have got GBP pairs. So GBP crosses are good to also pay attention from tomorrow onwards or later today onwards. And then you've got the Euro GDP. So you want to always watch out for these results as well. And then we have got the President Lagarde's speech as well. So she will most probably give hints about what's going on in Europe. So in Europe, we want to focus on 3 countries, Germany, Italy, and also France. Overall, if it's actually positive on these countries as well, being the major economic powers, then it would actually drive Euro to the upside. But looking at how USD is on the downside, I would actually look into Euro USD for the buy, I think, option more than the sell, but then we need to confirm that onto the chart. So Wednesday, 19th, midweek, this is where we'll do the midweek Bretton's, oh, give me a second. Just excuse me for 1 minute. I'm just going to get my charger plugged in. Give me a second. All right, I think we're okay now. Let's just, okay, guys, sorry about that. Just to plug in the charger. Okay, so on Wednesday, May 19th, we will be having the midweek webinar. And on that day, I would think it's going to marinate even more movements, volatility, liquidity as well. But we still have got a carry on of GBP or UK related data. We got CPI on that day. So it looks like a very, very busy week with data, even though you've got a mixture of low volatility, low impact ones, medium impact ones, but the list is quite long. Generally, or on average, it's quite a long list. So that would actually give the media, mainstream media, a lot of material to talk about, and that would actually stir up the pot a little bit more in terms of volatility. So then we've got Canadian Bank of Canada Consumer Price Index, CPI of Canada as well. And then it would actually be finished off with the FOMC minutes, which is really a very big key situation that needs to be handled in the US as well, because of all the situation that they are going through at the moment, politically, with the COVID, with the current hacking of their major pipeline, all that kind of stuff. So with that, and then with FOMC, I think it's going to create a lot of volatility, a lot of movement. So I see loads of trading opportunities for sure. And then Thursday, May 20th, again, we've got some Chinese data as well. And then we've got a lot of Australian ones. So I can see that Australia dollar, NZD dollar, as well as all the crosses of AUD and NZD may actually be giving us a lot of opportunities for this whole week starting from today. So we want to monitor them as well, write them along. We've got the ECB's Lagarde speech again on Thursday. That's going to move a lot on the euro side of it as well. And then Friday, May 21st, again, we've got all the Australian figures as well, including its retail sales. And then we've got some European figures as well. We've got a Euro group meeting on Friday as well, but that actually will be driven by what happens in Germany, especially with the manufacturing PMI and all that, because that's where the focus is going to be as well. And you can see all the European type data is actually clustered together. And then we've got another retail sales for Canada. So very, very busy week. I think we can pick out loads of pairs to trade, but we want to also monitor as of now what has been going on with our existing trades. Now, I want to start off with gold first, because gold has been really good in terms of how it has actually progressed in this whole blue area. Now, the blue area or the blue zone is our buy trading zone. So it has already entered this whole trading zone back in about 2 weeks ago, if I'm not mistaken. About 2 weeks ago or a week and a half ago, it has started to pierce through and penetrate through and getting into this buy zone. But when we look at price action itself, we never expected it to actually enter this zone without knowing. I mean, it's just price action. We never knew, right? What could actually happen with the US dollar going down, retail sales going down, and then got hacked in the oil side of it. And also with the issue in Colombia protests, all that never actually happened yet. And now all these things that have actually happened is forming sort of like a fuel to actually push up gold's prices, and the falling of US Treasury, 10-year Treasury yield as well is going to be giving us a lot of confidence, I think, more built up confidence in buying our in buying gold and also in hitting our take profits. All these are our take profits. So I can see that it's probably already hit the third take profit at 1854.48. So we have got the fourth TP looking at the 1863 area, 0.147 and 1879, the fifth TP, and then the sixth TP at, is it the sixth one? Let me see. 1, 2, 3, 4, 5, 6. Yes, we've got 6 TPs. We've already hit 3, if I'm not mistaken. And then we have got 3 more to go. So it is actually looking really good in terms of gold. Because of the big flow of Chinese buyers at this moment of time as we speak, I think the buying of gold, even for us to actually look at the whole marathon, could actually last for the whole week. So I'm not surprised if at all these TPs are going to be hit this week. I'm not surprised if that's going to happen because this could actually be driven by lots of fuel out there. So a lot of factors, a lot of catalysts, including US, including Chinese buyers, including Chinese data that is very positive, and all the commodity prices, especially oil, copper, and all that are going up. So when they go up, they will drag the others as well. But the good thing about gold as well is because of all these other factors are actually risk factors, and because they are risk factors, then people are going into safe havens. And when people are selling selling the dollar, and dollar is actually dropping for various other reasons as well, then investors and traders are looking for safe havens, and they want to hedge as well. So because they want to hedge against inflation that is going on, anywhere between inflation and hyperinflation, that's actually what's going on. But the big news are got to do with all these protests and this hacking of pipeline and all that kind of thing. And then together with that, you have got positive data, especially from various countries that actually hit the right spot on pulling down the dollar and pushing up safe havens interest, especially CHF, JPY as safe havens. US is also USD is also a safe haven, but not in this case. In this case, as I've mentioned before in my webinars, the USD becomes a safe haven and people will buy the dollar when we have got issues and risk events got to do with COVID in Europe, especially in the UK, in London, in different countries in Europe. Then you will see USD going up. But now that is not the case. Now USD is directly pulled down by the 10-year treasury yield, and also all these trading partners are actually suffering at the moment with some protests, risk event, and also itself where the pipeline, the largest pipeline basically in the US is actually going through some threats as well. So because it has already been hacked and all that, of course they will deal with all these things. But in the process of doing all these things, they are also going through a lot of cover up of news as well that has not been accurate. So all these thing about inflation going up like ballooning, it doesn't actually mean that the USD is actually doesn't mean that the US economy is really strong. It actually may actually mean that a lot of not clear information about the US economy has been spun out before in the past. So now the question is, are all these data actually really real or not? Is US really doing well, or actually there's something behind? So this is what's going on, and this is good news for gold traders mainly, and also commodities in general, because this is the commodity trading time. So I would guess for this whole week's going to be great. So here now, gold is trading at 1852. So for us traders, and especially for myself, when we have had Hi there, guys. Testing. Sorry about that, guys. Let me just see whether everything's okay. All right. Testing 1, 2, 3. You guys okay? Now you can hear me. Let me just put my camera on. All right. Let's see. Okay. Sorry about that, guys. I thought I switched on my charger for the battery, the charger for the laptop, but then I just realized that I didn't even switch it on. So sorry about that. Okay. So we're back. Let me just get to gold as well. Now we're looking at gold. Let me just make sure that this is recorded as well. Okay, it automatically recorded anyway. So, okay, good. So we've been talking a little bit about gold. It's doing quite well at this moment of time, trading at 1854. So we're just looking at it hitting the 1863.47, 1879.87, and 1897.32. So these are our TPs right here. So you can always look at these prices. And we're just looking at it hitting these TPs. So usually what happens is if I am trading based on price patterns as well as price action, like how I have done for gold, then I usually, me personally, would actually just leave the trade on as well, mainly because the probability is quite high once it has actually entered a buy area, a buy zone or a sell zone, then because it has been evaluated quite well in terms of prices as well as mother candles on the left, and that's hence the reason I have actually laid out all these TP prices as well. So when we are actually going through the trades as such, and it has actually gone into a nice trading zone, for example, then when you look into when you look into the prices trading inside the zone, then we could also see that patterns start to actually be quite clear as well. So as you can see, prices are going up for gold, but then within this area, you can actually see A here, B here, C here, and then a projected D. So I could actually do that by looking at maybe this base right here and look at where the C point is. The C point is minimum 38.2 on that one there, so that's good. So what I'll do is just to get rid of that and draw a pattern, let's say. So just change the color there to yellow. Okay, so we've got an A to B leg right there, and then you want to draw your B to C right there. So the B to C, the C point is a minimum of 38.2. So because a minimum of 38.2, you are then able to proceed in drawing the pattern further. If it is not a minimum of 38.2, then it shouldn't be drawn further, and we shouldn't be trading patterns. We can trade other methods, other approaches, like your just price pattern or using any indicators or anything like that. So here, for example, we can see that coincidentally, by drawing this A, B, C, D geometric pattern, the D point is also pointing very close to the 1897.32 area. So this is a good sign. So this is your geometric pattern based on gold versus the dollar. And let's just okay, just want to give it a little bit of color right there, just so that it gets, it's more obvious as well. So, second. Okay, so we've got economic data, we've got risk events, we have got the geometric ABCD pattern right here, bullish geometric ABCD pattern. We also have had all these line up of TP prices as well that has been lined up 2 weeks ago or so, and all these ones has been a good form of ingredients for gold to actually go up. So then that this is the reason why it has actually been driven and pushed up as well. So I think it's made up of very good ingredients or factors to actually push gold's prices up, and I see a very good possibility, I think, in my opinion, for all the TPs to actually hit, and possibly even this week. So it's going to be a very volatile week that I think will have lots of liquidity as well, especially for commodity currencies, commodities as well, including gold, silver as well. But silver usually move a little bit slower than gold. It always picks up at the back. You know, it's like a little brother of gold, but it's always on a slower pace, more steady as well. So gold will actually take the lead first, mainly because it's a safe haven type inflation hedge type instrument as well, used by the banks and the big traders as well. And then we've got lots of Chinese buyers. So yeah, let's keep our fingers crossed into more gold prices going up so that all the TPs can actually be hit for gold. Okay, so let's also check onto some major pairs. Let's look at Euro USD, USD JPY, GBP USD as well. Major pairs first, just to see what we can actually notice. I'll take all these one out. Let me just get rid of all these. Okay. We've got USD JPY right here. I just want to take a look. We'll just go through one by one, maybe perhaps Euro USD as well after this. With regards to USD JPY, we want to make really quick observation as well when it comes to the chart, when it comes to technical analysis, whether it's a daily chart, weekly chart. It's just the higher the time frame, we've got more data. We want to start with overall picture, generic picture first. So here, for example, just very quickly, when we look at the price of USD JPY itself, we want to go straight into price action first, and then we want to notice what has been going on in the cluster of candles here, and also cluster of candles here. Now, current price itself is pointing at 109.21. So as 109.21 goes downwards, we will be able to just plot the psychological number of 109.00. So you want to plot the 109.00 psychological number. Okay, now this one here, you want to leave it there, right? And then as 109.20 goes up and up, it will meet or bump into the 109.50 psychological number. So then we know that the price of USD JPY currently is trapped in between 109.00 and 109.50 psychological numbers. Okay, so as it does this, it gives us a better picture that it's probably not very safe to just have a trade right now, to click onto the buy, click onto the sell. It's probably better if you want to sell lower. You should be selling lower than this line here, 109.00, and lower would be a better ideal price for your sell. And similarly, if you want to buy, then you want to buy above 109.50 and above. So let's look at the scenario in terms of the overall picture of the trend. Now, the trend roughly, if we start off with the 1 hour chart, it's best if you want to do a trend analysis, not to do a trend analysis only based on one time frame, and also on shorter time frame, like 15 minutes, 30 minutes is not going to be giving you sufficient data. So it's probably best to actually cluster the trend analysis into a set of 3 time frames: your 1 hour, your 4 hour, and your daily. So if we start off with a neutral time frame, like the 1 hour time frame on USD JPY, we can actually see that it's unpredictable. It's not clear on the trend, mainly because the 3 lines, the 3 EMA lines, are all sideways, and then you've got all the candles inside the 3 lines. So this is giving us the hint that if you are trading and you are on the 1 hour chart, it's probably best not to trade yet, mainly because is just not going to be giving you the best of results, give you a lot of confusion because the market is actually a little bit confused or uncertain. It is uncertain because the three lines are pointing sideways and the candles are inside the three lines. So then we need to compare now 4 hour with 1 hour with the 4 hour. So we move up one chart up, one time frame up, and then we look at another set of confusion. Then we've got candles are not matching with what's going on in the 1 hour chart. The 1 hour chart is uncertain, clear, trend is not clear. And then here we are seeing that it's above all the three lines and the bias is maybe to the upside, maybe. It's finding support in the EMA for the 4 hour chart. So then we need to move on to the daily chart. And then on the daily chart, we can then see that the preference of the market for medium to long term would actually be on the upside, mainly because of how candles have found support is above all the three lines. The three lines are like this and it's pointing upwards. So the bias may actually be to the upside. So if I look at the daily chart and I just want to look at extra information on the weekly chart, I can then see that this is what's going on at this moment of time. And I can see that the current price right now, it's, if you look to the left, it's too close to a big resistance area right here, which has got a very giant big mother candle right there. And this fall from this part right here, let's say, or the opening price of the mother candle right down to this low price here is almost 700 pips down. So we need to really be aware that if price were to go up, it might actually find resistance at this area right here. And the resistance of the opening price of the mother candle that you can see is very close to 109.50 psychological level, where usually all these psychological levels are reversal areas as well. So at this moment of time, in my guess, I think in looking at all these hints that is going on, I feel that the USD JPY will definitely be driven by more sellers than buyers, okay? Because if you look to the left, you have got some buying candles here and all that, but then you need to respect these resistance of 700 pips first. Okay, and then as it goes up, you can see that the opening price of a mother candle, bearish mother candle, is also here. So that is another line that needs to be driven, that needs to be drawn right there, which basically mirrors all this resistance area. So now we've got a block at the very top. So this is confirming the downward trend for the USD as well. And then technically we cannot move up anymore too much because it's been blocked by very strong resistance. So I would imagine that selling the USD JPY will actually be better. So the selling price would actually be at 108.90 onward. So what I'll do is I will draw the 108.90 price as your entry price. So you can actually enter a sell or do a pending order sell at 108.90. And that will be a better ideal price for a sell, 108.90. I'll just color that red. Give me a second. Red horizontal line. So that is your selling price for USD JPY. You can do a pending sell order selling at 108.90. Now let's take a look at how far it could actually go down to. Now, it could go down to following all these mother candles, right? So it can actually go down as low as that, can go down as low as that as well. So we want to take a look at all these mother candles that has broken out from this red line. From this red line, we've got one of the shortest mother candle is there, but this one here, for example. So what I'll then do is just to mark that there, and that was at 109.76 or so. It doesn't give us a lot of sense to right along that mother candle, but we've got other mother candles. But the longest one, we could see all these powerful ones right here, and I would think that we can actually take a look at just one of these mother candles and evaluate how good it is for support. So we've got a nice support area here as well. Okay. As price comes down, it could actually just mirror any one of these mother candles right here. So I'll move this one up just a little bit. Okay, and I'm looking at this support area right here as well. I'll take this one out. Okay, I just want the smaller area first so that we can actually take it in stages and not aim too many pips and too high a pips and get excited with overselling at this moment of time. We want to progressively sell together with price action, take it in stages, but also we want to take it in stages in terms of the kind of news that we will be hearing to make it more and more negative for the dollar. Okay, so we want to trade at that kind of level and stage so that we are safe in terms of our stop losses as well. We are comfortable with the amount of stop losses, and we could actually be comfortable with any shock in the market as well. What if it just changes direction because of something positive that the US has actually done or came up with, like maybe there's a solution now with the hacking thing, and suddenly you will see the whole dollar goes up with a big giant mother candle. That's what we want to avoid. We want to avoid being in too big a trade for too big a lot size for one single trade, and then get shocked with it, and then it will hit our stop loss probably. So this is where I see a potential of prices coming down, finding support at 108.42. Now 108.42 may not be a good a safer one would actually be to actually take profit at 108.60 instead, because the price that is falling from 108.90 goes down will actually meet the 50 psychological level first, right? Closest to 108.42. So it's probably best for us to adjust the price to 108.60. So now you've got a nice potential exit price based on psychological numbers, adjusting it as well. So your entry price could actually be for the sell pending order 108.90, and then your take profit price 108.60. So you've got a safe, nice 30 pips right there to actually take for the sell of USD JPY. Now let's go on to the 4-hour chart again and look at how strong this trend could actually be. So what you can do is go on to indicators, go on average directional movement index, ADX we call it, and we don't change anything there. We leave it at period 14, and then you go okay. And you want to look at this blue line, this bluish green line right here. Is it above the level 25? So it looks like it is above the level 25, which means that this downtrend that is going on most probably is quite strong. So it has some strength. So what that means is that maybe you don't need to wait too long for it to go sideways and then not come down. So it may be driven by a lot of fundamentals that is coming out shortly as well, and then that would actually hopefully pull it down and make the candle move faster. So this is your ADX. Your ADX is giving you the hint or the idea whether or not the trend at the moment has got participants. Is it strong or not, the trend? So that is basically what the ADX is used for, the strength of the trend. So the trend is down, and the strength of the downtrend is there mainly because the line is above 25. This is what it means, okay? So the daily chart is not showing you that so much, but the 4-hour is, and the 1 hour is not so much. So basically, if you look at it at the 4-hour, that actually means that any time between the 1 hour to the 4-hour, any time between 1 hour's time to 4 hours time, you can actually see some movement of the US dollar, and most probably is to the downside. Okay, so we got question. Yes, we will look at NZD USD. So we'll look into NZD USD. Give me a second. Euro JPY. Okay. Yes. All right. So NZD USD. It's trading at the moment at 72.26. Okay, let's just move that there. Gbp AUD, yes, of course. All right, let's take a look at NZD USD first. It's trading at 72.24 area, NZD USD on a daily chart. On the daily chart itself, it's giving us the hint of an upside type movement in terms of generic trend. Yeah, also on the weekly chart, on the 1 hour chart, it's showing a lot of potential to actually go up. Now, if we look at the 1 hour chart itself, it's trading at 72.24, so it's already above the 72.20 psychological level. One of the things on the 1 hour chart that we need to be aware of is that it is approaching a closing price of the mother candle right here at 72.28 area. So it's actually quite close to the 72.20 psychological number. So if we want to actually buy, we need to actually look at the 10 pips above 72.20. So 72.30 and above, potentially we can look at a buy potential. There is a mother candle right here that is quite a long one here. It started from here and ended there. It's about 47 pips in that one mother candle itself. So if we were looking at, let's say, you want to do a little bit of a buy on NZD USD, then 72.30 would actually be your entry price for the buy, and your exit price or take profit has to be, let me just check. Okay, now it could actually go up and find a resistance at 72.50 area. So you've only got about 10 pips to either you make 10 pips right there, shortest term, because we need to be aware of this area and also this area at the 72.50 area, because this support could actually become resistance as well. But your next entry would actually then be your 72.60 area. You see, so let me that for you. 72.60 will be your second entry for the buy at 72.60. Then your take profit for that would actually be at 72.70. Again, it's 10 pips here and 10 pips there. It's not giving the hint yet that it is strong on the 1 hour chart. So in my opinion, you can make a bit of 10 pips or so, but you have to be very, very careful, especially if you're trading on short-term scalping or 1 hour chart, or, you know, very, very short, because it's not giving the ripe opportunity for buying yet. The candles are not giving me that hint. So if I go into the 4 hour chart, I can see that there is potential, but then we want to be careful, first of all, with the fall. It has to go beyond the fall. Let the price go up a little bit more, especially to overtake this resistant area as well, just so that we have more confidence for it. So I would think that for NZD USD, it's probably better for us to wait a little bit until London Open comes in and until another 2-3 hours more to make the price go up to 72.30 and above. If it does actually go up 72.50 and above, like 72.60, and then go up a lot more, then we might find more opportunities of trading. So let's now go on to a longer time frame, just so we can get a bigger picture of what are the buying opportunity for NZD USD. So if we go on to the daily chart, let's say, you've got some long candles here. You've got, to the left, you've got one here. So there is a bit of a buying zone based on the daily chart. If it is based on a daily chart, meaning it's anytime from 4 hours and above, you know, in within 4 hours actually, or half a day, let's say, this is what's potential. So there is a bit of a buying zone right there from 7213 right up to 7294. So I would think that 7290 would actually be not too bad a place, but let's see. Yeah, or 72.70, because now we are at 72.20. So I think there's definitely some potential, but you need to exit at 72.70. So whatever you do, you're buying now or you're buying later on, make sure you exit at 72.70. So it's definitely your choice of when you want to buy, and you want to buy it now or you want to buy it later on. But the exit price is more important at this stage, because you don't want to be left hanging with losses, and then it just goes down or something like that. So take profit at 72.70. So that's your exit price that you need to think of, no matter what you do. So whatever you buy at, wherever you buy at, make sure you exit at 72.70. So that's big, basically it. The other thing as well is there's this mother candle here that is parallel to, I think, this mother candle right here, if I'm not mistaken. So let's take a look. Yeah, it's more or less. So that price right there, or even slightly lower, is very close to the 72.50 area, you see. So that is another area to really take precaution and be careful. But this is a potential buying area from now. But the buy price would probably be better at 72.30. So if you are buying at 72.30 and you are take profiting at 72.70, that is your 40 pips potential. So that 40 pips should be double up to at least about 80 pips or 100 pips for your stop loss. Okay, so then it will help you understand what you are willing to risk. If you are willing to risk 80 pips to make 40 pips, what is your lot sizing should actually be, because it needs to be based on your stop losses, your risk appetite. You are willing to risk 80 pips. So is it better $1 per pip, or is it better one lot? So you wouldn't want to be losing or willing to lose $800 but $80 maybe, right? So that's basically how you would need to evaluate your own risk appetite in terms of the stop loss level and in terms of the lot size especially. So that's NZD USD. Okay, any other questions on NZD USD? Shall we take a look at GBP USD as well? Let's see, what do we actually have? Okay, GBP Nzd 1.4107. So we need to be aware that we've got quite a number of data coming up as well for GBP. So it's going to drive the movements, the volatility, as well as the momentum for GBP crosses in general. But let's look at it. GBP USD on a daily chart, it's looking quite clear that it's on the upside in terms of bias to the upside uptrend. Looks like it's looking like it wants to go up, but then if you look to the left here, it's very clear that we need to watch out for this area right here, especially at 1.4132 area. So I find potential resistance right there. So maybe you might find a bit of resistance first before going up further. If we look into the short term, it's also possible for it to actually go up and find resistance as well. We've got all this resistant area. We've got candles, bearish candles. So I'm a little bit weary of buying at the moment. We've got, let's say, only about 20 plus pips, 20 pips or so before it reaches areas that it could actually resist to go up for more and then come down. So not really very clear for me to actually participate in GBP USD at this moment of time, because it looks like it's tricking the traders at the moment with very long candles, very nice bullish long candles, mother candles. But then as it goes up here, we have got this long candle down, long mother candle right down, which could potentially just reverse the price and become a resistant level and pull down the traders downwards. And that could actually be maybe for those who wants to anti-trend a little bit, you can actually not buy, but then when price start to go up here and find resistance and start to fall, then you can actually make about 50 pips or so to the downside as opposed to now on the upside. So for the upside, it's a little bit too little to consider, only because I've got that mother candle right there on standby to actually pull down the buyers. So I see that as a potential resistant area right there. Let's see, and it's also very powerful, not only with that single mother candle, we've got another single mother candle right there. If I go on to the weekly chart, again, with more data, I can see that it's probably going to be pulled down more than it's going to be pushed up, because you have got resistant area, resistant area, resistant area. This resistant area is quite powerful here, because from this area right down to there, that is 2,800 plus pips down. So that is a very high magnitude type resistant level there, and it's got all this area already blocked to the upside for some reason. So maybe something may actually motivate the GBP to go down more than go up. Maybe something negative in terms of the news, COVID situation, maybe the data release wouldn't be that good. We don't know that yet. So we just want to ride the trend. So once it comes out, the news, then we will actually write the trend and use the technical analysis to confirm it even more. Okay. Okay, good. So we've covered GBP USD and ZD USD as well. We can actually take a look at GBP AUD. So let's take a look at GBP AUD. So GBP AUD is a pair that I have been trading as well actively the last couple of weeks, if I'm not mistaken. Yes. So I've got all these existing drawings. So let's just get rid of that and start afresh with a new chart that has got no drawings on it, except for the EMA lines, or the exponential moving averages. So at this moment of time, I'm on the weekly chart. Let's say we look at it from a daily's perspective. So from the daily's perspective, it's quite clear that there may be a potential for it to actually go down. Reason is, when you look to the left straight away, you can see that it's at a resistant area right here already. And if, for example, it finds a correction and it starts to find a correction, it could find a correction a little bit higher right here at the closing price of that mother candle right there. And that mother candle right there, closing price itself, is very close to the 1.8180 psychological level. So it makes sense that it might want to resist going up at that level. Now, of course, it's tricking lots of traders thinking that, okay, it's an uptrend, especially if you're looking at a single candle. It's very easy to think that it's an uptrend, but that's not the right way of looking at trend. It's not a trend when you are looking at just one single candle movement and the body of a single candle. So that will then trick the other traders, smaller traders, retail traders, to actually buy and buy and buy, and then it will disappoint the traders and start coming down. And if it does actually come down, it can come down in the length of this mother candle or this mother candle. But let's take the shorter one first as your support here. So this could be a support when you are selling, not buying anymore, because it will resist most probably there. So 8110. Okay, so I just want to change the color to blue to indicate it's a support line where it could actually find support when it comes down. So it needs to break out of this red line at 8161 area. It could also find support at this area right here, which is the opening price of a mother candle right there. That opening price of that mother candle is actually the same there, and it's also resistant for some. So it's quite a strong one. So this is your area to actually trade, is just in between right there. So potentially to actually sell, 8140 and then take profit 8130. The problem is that it's only about 10 pips potential right there if you want to do a sell. But if if it does actually come lower, 81.10 and below, then you can see a better potential of your price coming down to 80.20s area. So that actually means that you can take profit at 80.30 area. But that is your second entry for the sell, because your first entry is only about 10 pips potential. 80.38, 80.30 area. There you go. And 80.60 area as well. If you want to take profit earlier, then you can consider 80.60. So I think that for GBP AUD, the uptrend is very limited. It's finding resistance time. I think it will be plunging downwards very soon. So the lower it gets, the lower it goes down to, the stronger the downtrend will actually be, because you've got a lot of backup of longer bearish candle to the left as well as it goes lower and lower. So as it goes lower and lower, you have some support here, you have some support there. So I think it would actually be driven down first as low as this area right here. Yeah, which is the 78 area, 7800 area. So I think 7800, 7820 area, something like that, it can actually be driven down more, but it needs to be monitored to look at whether or not it will go down much more, because now it's sort of tricking the market, but it's tricking the market in a very strong resistant area, actually not at a support area. You look to the left as well, you've only got this one bullish candle, and that is finishing already at exactly at the price that is trading now. So the current price, we had a very big pin candle right there telling us that it couldn't go up more. So that one there is telling us that this is no zone for buying. There are no zone for buying above the red line here. So it's only zone for selling. So I think it will ride along a selling trend as opposed to a buying trend for GBP AUD. Okay, if you go into the 1 hour chart as well, you can see that it's reaching this area right here as well. It's got all this cluster of candles here that forms a resistance, and then you got limit as well there. Okay, so there you go. So that's for GBP AUD. Okay, any other questions? You guys are okay so far? Any questions? Okay, let's check. GBP JPY. All right, we'll take a look at GBP JPY. It's the last pair we'll take a look at, and then we'll end the session. Okay, this one here is a pair that I've actually already done some analysis sometime, and I've laid out a very strong resistant area. So again, for some reason, GBP crosses like the GBP AUD, GBP USD, and GBP JPY now is hinting us that there is a resistance that we need to look at. So there may be something that may come out during the day today from the news or from the data release results that may actually be negative as opposed to positive. But then again, we can never tell. If it is actually positive, then it will break this resistance to be a very strong buy opportunity. So we don't know that yet. So we need to actually be careful and see which trend the catalyst or the fundamental, the news and all that will actually push it and fuel it to which direction. But all we know is as of now, it is a lot of resistance at this moment of time, and it's actually too close to the 154.00 psychological level as well. Okay, so it's not giving us a lot of opportunities at this moment of time for the buy. If I'm looking at it at the weekly chart itself, you can see that you've got a limit for the buy at the 155.50 area, mainly because of this. So there's been a very big fall from that level right there at 155.50 area, and it has actually dropped price to about 3,000 plus pips down. You know, all this movement was worth 3,000 plus pips downwards. So very, very strong. I don't see any sort of bullishness. There is a little bit of bullishness only above that, but at this moment of time, maybe the current price will want to be dropped first before it goes up. And we've got a giant candle right there as well. So another candle. So that is actually, at the moment, the current price for GBP JPY is trading and moving in a bullish, in a bearish territory, not a bullish territory. So it is inside a bearish territory at this moment of time. Okay, GBP JPY. So that could actually be because it's combined with a safe haven like JPY. So maybe there's more interest in buying the JPY and to form it as a safe haven. So I think because JPY has dropped quite a lot already, it has gone up before when the risk event started, went down a lot. So now I think it's time for it to attract more safe haven buyers again. So maybe that is why it is actually pulling down the GBP as opposed to having any buy opportunity. So you want to watch out and be careful with buying opportunities, because I don't see there's a lot of buying opportunities or buying interest, because it is inside a very strong bearish zone at this moment of time. So it's inside a selling zone as opposed to a buying zone. Okay, so this is for GBP JPY. So okay, any other questions, guys? We can end the session. Yeah, all good. Okay, perfect. All right, any questions? You guys know how to reach me, so you can ask questions at any moment of time. Okay, so have a great pipping week, great geometric pipping week as well, and also a great trading week, because I think there's a lot of opportunities this whole week, but you just want to be careful. My only reminder is have your stop losses, and also trade in stages would probably be best, because then you can practice your compounding of your pips as well. Okay, guys, take care. Have a great trading week as well, and have a good day. Bye-bye, guys. Thank you.